Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 14th of January, 2019, about 4:40 p.m. Central Standard Time. So here we are, the stock market down. You know, PG&E, the large utility in California, is declaring bankruptcy, and I wonder what that's going to do for the municipal bond market. I mean, if a utility just keeps going under when there's a catastrophe, if this sets a precedent, what does it mean for the bondholders of that? I don't know, but it's something to think about. In any case, the metal markets were up a little bit as the dollar was down. It was an extremely quiet day, and we're getting divergence in the metals. I get one part of my work that says that the market should be falling back towards the 18-day average, and the other part we're just going sideways. Never quite sure what to do with that. As you can see in the energy markets down with a monstrous move. This is a huge move in natural gas off the weather that's now hitting the East Coast. So we come straight down, we go straight up. It's about a 13% jump in price today. So as we look at the stock market, we've still got this overall pattern of lower highs and lower lows. That does not mean you can't all of a sudden get something up. But for the week, the market down about 14.5 points. When I come and look at the bounce in the market, that's about what it is. If you took this high to low, you're in the 50% range of a bounce in the market right now. What could be a problem is taking out this low in the market of, and I'll come right here so you can see it real easy here, of 25.60.50. Why? Well, that could just continue this pattern of lower low, higher high. You're not getting a trend out of it. Overall, we've had the higher lows and higher high, but we're not getting follow through in the market, and I think you can see that. If the market takes off to the upside, and I say upside because the bias is up as long as you stay over the 18-day average of closes. Let's assume it cleared 25.97, gets up here into the 25.98 level. Well, one of the objectives could be the 100-day average of closes. When you put Bollinger Bands on, this is way under the market. So I'm going to say 26.41 would be one of the areas to look at. We've got a double area here of the 200-day moving average and the 100. So I think you have to have an upside bias to the market right now, and the market is overbought. Now, overbought gets resolved in one of two ways. It either breaks down, which starts working on getting it out of overbought territory, or a market can embed. Embedding means the way that I teach charting, that the market converts from being overbought to locking in a trend. And that happens when both the K and D lines, the K being the red, the D the blue, of the slow stochastic go sideways over the number 80 for several days in a row. As you can see on Thursday, that was not the case. So in order to embed and keep going, you've got to close tomorrow on a firm note, keep the embedded reading going, and you'd want to close in the top part of the day's range. Those are different things that I've learned over the years, so we'll see. What does that mean in the market? It means you're still in an uptrend till you're not. In the NASDAQ, it's still the same way. Higher lows, higher highs, resistance at the upper Bollinger Band. If you break down here under the 65.2750 level, could be a problem for the market. It too is trying to put a couple of days in a row. See that? You didn't do it on Thursday. Over the 80 level. The Dow, how many days do we have over the 80 level? Today, Friday, not the day before. So there's a common theme here that the market's overbought, might embed, but we need to see how tomorrow's going to perform. But the sideways action, we'll see. You often don't embed. Keep that in the back of your mind. If you go back on a chart to see more times than not, do you embed or not? You don't. Overwhelming number. So the odds favor could be a down day tomorrow to keep that away from happening. And in the Russell, what about how many days we have over 80? We've got today, obviously. We had Friday, not Thursday. All three are the same identical thing. And the VIX, of course, is embedding. Take a look. Both numbers under 20. It's a flip-flop. Day 1, 2, 3. You've had this. And the market has dropped with it. You're 4 days in a row, and you can see that that causes the market to come down. Now, the objective, the first objective, was hit on Friday already. When you hit the 100-day average, you played around that today. An idea that you lose the embedded reading would happen if the red line closed over 20. We'll see if that happens. And if it does, it probably means the stock market's going the other way. In the bonds, as I'm looking at the chart, you know that I consider the red line in each of these charts, which is the 18-day moving average of closes, the line in the sand. And when a market's up at an upper Bollinger Band or down at a bottom one, it is not uncommon for the market to retreat to that 18-day average to try to figure out what to do next. And in the case of this market, you have a higher high and a lower low. I don't see that it's had its decision yet. When we look at the 10-year notes, the trend is up. Different than the bonds in the sense that you already have the higher lows, higher highs, so that's in place. You lose the trend on a break under Friday's low, which would take the market in this case, 121.19 and a half. And by the way, that would be under the 18-day average, but you'd have to close under that. But that would be the element that takes the market out of the uptrend at this point. When I come to TLT, it's a warning sign because this market's in a downtrend confirmed. What do I mean? Lower highs, lower lows. The confirmation to me is that you're under the 18-day average. The negative part of it, and there is a big negative, you're very oversold. You haven't begun the embedded process. What if you keep going down in the oversold? The lower Bollinger Band becomes the support at 119.33. Where's the resistance in the market? The 18-day average, 121.13. What kills the downtrend? Taking out 121.27, but it would not start an uptrend because the way that I teach charting, you'd have a lower low and a higher high. In the dollar index, the market has been stuck at the 100-day average in green for a while now. You've oversold. You're trying to correct that with the market either going consolidating here or trying to get a rally. If the market were to take out 95.36 and a half, you would negate the downtrend being defined as the lower highs, lower lows. Now, we know that getting under the lower Bollinger Band here, as I often tell you, is an extreme. So the market is bounced. Now the question is, what next? To keep the downtrend going, the problem is for a lot of traders that look at oversold, overbought, you're maintaining the oversold part of the market. In the eurocurrency, you've corrected, past tense, the overbought condition. Unlike the dollar, you're not trending. You have a lower low and a higher high pattern, but you can see the market, when it got to the black line, the upper Bollinger Bands began to run into resistance, and the combination with the 100-day was a bit much for the market. We also have the Brexit tomorrow vote taking place in the House of Commons. We'll see what that means. There's problems in Greece again with Macedonia. We'll see how the names go there, and Italy's budget is coming under question again. We also have a lira question out of Turkey, where their central bank might surprise the market and do some rate cuts. We have, in a pattern of the pound, the higher high, higher low. Which way is the market going, and what's more important? Some people think the best thing that could happen is that the Brexit vote gets defeated in the House of Commons, that there's no deal on the table. It either gets extended out and they don't go forward on March 29th. I don't know what creation I don't know how that works with the European Union. Or maybe another referendum vote where they decide to stay in with Brexit. It's anybody's game, but so far the worst has taken place and the market has shrugged off the negative. It's gone into an uptrend. It might even want to reach to the upper 100-day average. Remember, forget the name often of these things. Look at the charts and let the charts tell you the story. However, when I see a major event, be it a Fed, FOMC meeting that could go either which way, a Brexit vote, an Italian vote on crazy things, I pay attention. I stay away from markets, you know, because you don't even know if what's built in and baked into price. You just don't know. In the end, there's a problem here. I see a clear lower high and higher low. Let me tell you the problem I'm having. When you lose an embedded reading often, not always, often, price and the 18-day average make a run at each other. I don't consider this that close of a run. Yeah, we had that break when you lost it, but will prices come together? Now, don't get me wrong. Anyone that sold the market on this part hasn't done very well, and that's a contra-trend trade anyways. But that loss of momentum always bugs me. So at this point in time, I wouldn't know what to do with that. In Bitcoin, I've been on TikTok and the other markets from Bloomberg and so on talking about it. You've got a pattern of lower highs, lower lows, and you hit a downside target today. You got down to the lower Bollinger Band. You found your support there, and you actually closed a little bit higher. So you have what's called an outside day up. To break through this support, I think you have to take out today's low, be it on Tuesday or Wednesday, and stay down under that Bollinger Band. Otherwise, I think you're giving the bulls a ray of hope here, and you might get back to that 18-day average. You've negated the downtrend in one manner. The high's already taken out that high. So I could argue you got lower highs, and there's so many arguments I can make here on the pattern. Suffice to say, I think the bears have come out today. In the Brent versus WTI crude, you can see how it's rolling back over. So the differential between the two is coming together right now. It's funny that it hit it in Brent at the upper Bollinger Band, fell back. And remember, Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. But some traders look at it the way that I do, and I've got decades of working with it. Doesn't mean I'm right, by the way, but I view it the first time you hit a band is often where money comes out of the market. Did I say all of it? That's not what I'm saying at all. But traders, there's a difference between investors that buy it and want to hold it forever and a trader. And that is it. By the way, you know what an investor does? An investor looks for the unexpected. That's often what they're trying to do. I read that today. It's pretty interesting. WTI got up to the upper Bollinger Band, backed off. Overbought condition here. Overbought condition in the Brent, by the way. Rebob gasoline, you've got the higher lows, higher highs. Could prices fall back to the 18-day average for support? Certainly. When we look at nat gas, this is a pretty dramatic move. I mean, you're up 12%. The intraday highs were pretty close to this, in fact. I was watching it just laughing to myself because I'm going, here's the embedded reading. But we'd had a pattern already of higher lows, higher highs. We had divergence taking place. This rules the day. And when I saw last night how the market opened, I went, game over. And it did what I would think. It went to the 100-day average when you lost that. I'm sorry, the 18, then it poked up to the 100 because it happened to be above it as the next resistance. Could it run further? Get a big storm? Anything can happen. I just saw in Chicago for the weekend we're due for anywhere from 4 to 8 inches of snow. So cold weather coming this way, big storms on the West Coast. You know, one of the things I love to do is write about different events, market research for you, so on and so forth. I'm writing a report right now on the dollar index, and I will include it with my commentary. How do you get this? Because I call my list of free trials all the time. You don't keep up with it. You can't, because my research I control. So if you want a trial to it or want to see one of my reports, give us a call. Go to our website. You'll see that you can sign up for anything free there, or you can click right up here. In the meantime, I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.